How are we going to get there?
Earnings growth, mostly. I think if we look at the underlying listed universe, revenue has been growing faster than average economy, and then the margins have also been expanding since 2020. And the quality companies, that is more obvious because upstream pricing has been firming up, yeah, and then consolidation, adding to market share and pricing power. And so the listed universe in the aggregate are doing better. But there are also the fading of the so-called old hero, which is property, and it's very much in the headlines. But if we look at its weighting in the index, MSCI China, I think is 4%. Yeah.
So earnings, I'm looking at the current forecast. It doesn't seem like that would support us getting to 6,000. What you're saying is the market's due for a re-rating on earnings expectations for next year.
18% earnings growth and then a marginal expansion in the multiples. When we look at the historical trading pattern in 2018 and so far this year, U.S.-China relationship has been a very big swing factor. And it's a factor of 3 standard deviations in terms of PE multiples. So if there's some improvement or moderation, yeah, toward a pretty low base right now, then we would have that pretty easily.
I think on the other side of that trade is Bank of America, and they were saying, look, when it comes to tighter financial conditions, that doesn't bode well for earnings growth. What do you say about that?
You know, that was probably true before the policy trough, but we just had the policy trough. So we're waiting for the credit trough, and we're waiting for the earnings trough, right? And I think the earnings already moved ahead of us because the bigger story, which is untold, is enterprise CapEx. It's up about 13% this year. It's a 30% of total FAI. You put infra property together, it's about 41%. And when we look at the A shares, yeah, in our year ahead, we did a deep dive into it. Cash balance, earnings, all picking up in the past 12 months, and generally that leads to better CapEx in the year ahead. And so that component is about 18% of the MSCI China.
Okay.
Yeah. Not all of it, but a sizable portion of it. And it has to be better or bigger than property at 4%.
That partially only becomes true if the credit impulse turns. And that's still negative, though, right now, in terms of, because we've seen some policy support, we've seen a policy trough, as you point out, whether the economy feels that and corporates feel that and start spending. Well, I guess my question is, what is your expectation on a credit impulse? Does that turn positive next year?
Yep. So we had a swing factor about 14%. From positive 10.7 at the beginning of the year and negative 3 in November. Okay. So our economist is looking for this to go up to positive 1%. So directionally, directionally, it's better. But I would think if you look at a lot of the lending facilities this year, so far this year, it's very targeted, yeah, for certain sectors. The green sector. So I think you have that. It's just one part of the new hero sectors coming through as the old heroes are exiting. And so I think for our clients, they're very worried about the old heroes exiting, creating negative spillover.
So what are the new heroes now?
New heroes would be, you know, EV and renewable, which in the A shares have done very well. You know, 300, CSI 300, you know, the best performers are from those two ecosystems. I would add IT, software, you know, hardware, semi in that camp also.
Internet platforms?
Internet platforms. I think the market, as you've seen, have been trying to pick the bottom. Yeah. And we stayed cautious until late November, and then in our first December model portfolio, we actually went overweight on e-commerce for the first time. Okay. But preferring the second and third name because there's potential market share gain. But I would say 2021 is a year of new regulation. 2022 is enforcement. We would expect enforcement to be quite strict. So it's really about execution by the individual companies and earnings growth.
You said you've been looking at the whole overweight on e-tailing, which you changed that call earlier this month. What do you prefer? You still kind of prefer the top market leaders, or do you kind of look at more second tier, third tier now?
I think once there's a regulation, then there's more constrained growth. And when we look at e-tailing, 11 trillion GMV in terms of RMB and 90% market share by the top three. So we got to pay attention to who's going to gain market share on the margin and then maybe have a little less regulatory scrutiny. So those are our guiding thoughts in putting together the JPMorgan China equity model portfolio. Yeah.